welcome back. You know, you're probably not thinking about tax season yet because, well, it's July, and that's past April and just far enough away where people probably aren't thinking about it much. But Boyce Goff is back with us, owner of GDC Financial Solutions, and you know, Boyce, you're thinking about this stuff all the time.
Yeah. In fact, I wake up in the middle of the night thinking about this stuff. Nightmares and things like that. But there's a lot of new changes that are going on here, particularly with the political environment that's going on. In 2010, there was a number of tax benefits that were out there, or deductions, that we got down at the end of the year, and Congress finally said, well, we're going to extend those sunsets on a number of deductions. Well, this year, we're looking at them and saying, so far, nobody's done anything. There was a couple of patches done in 2010, but things aren't, looks like no one's going to really do anything this year. I mean, President Obama isn't really motivated to do anything if he's reelected, because then he's got his mandate to go ahead and do whatever he wants to and push that. Of course, the Democrats aren't going to really push that hard to do these. And we need the money, et cetera. Republicans are going to go probably push. And so if Obama doesn't get elected, then he's going to be a lame duck, and not much is going to be done between then and the time that whoever the Republican.
So you kind of tend to see not a lot happening in the world of taxes here over the next few months.
Right. But you better be aware, because some of these have some real major impacts on people's tax returns. There's 22 sunsets that are going to happen, but out of those 22, we're only going to talk about 7 of them.
Okay, what is a sunset before we get started?
Basically, what the law was passed, or allowing a certain deduction that would go for a certain time period. And when it hit the end of that time period, it's called a sunset law. In other words, by 2010, December 2010 or 2011, the law basically comes off the books. So, you know, they don't, unless they extend it. And so out of there's, like I said, there's 22 of these deductions that have been set up, one to motivate the economy, two, well, the biggest thing was to help motivate the economy. Well, now we've gone into 2010, 2011, and so far there was no patches put on anything on 2011.
Nor has the economy been motivated.
No, not very well. You know, not very well. Of course, I wish the stock market would just grow up and understand what's really going on, but, you know, it still lives off of, it still lives off of panic and everything else. Of course, I shouldn't say this, but I'm going to do it anyway.
As you sold everything this morning, right?
Yeah, as I sold everything this morning. No, the thing of it is you got to look at the market. And as I tell my clients, I said, at least when I go to Vegas, I know what the terms are. Because,
right?
Their goal is to take my money. My goal is to get out of there with my skin.
Yeah, break even and come home.
And in the stock market, you don't know what the rules are. I mean, it's a gamble, but anyway, you can still hedge it and things like that. But anyway, out of the 22, there's 7, and like I said, 7 sunsets here, or deductions, that we need to really bring everybody's attention to. And the first one is AMT, Alternative Minimum Tax. That was basically expired at the end of 2011, and if we don't change it, some 28 million taxpayers are going to end up getting hit with the alternative minimum tax, which basically says, all right, I've gone through and done my tax planning, I've reduced my taxes by paying my insurance, my property taxes, my charitable contributions, any number of things like that. Well, the problem is our capital gains rates and things like that. The problem with that is the government says, well, if you're a high income earner, we're going to make you add back a portion of that, and we're going to tax you at a flat 28%. And there's a lot of people out there going, oh, well, that's not good. I'm not a high income earner. Well, if you're hitting 200 grand or more, and in some cases even less than that, you're going to get hit with alternative minimum tax. So the thing that we're telling all of our clients right now, we need to evaluate your tax returns for the coming year. Okay? The next one is that if you have an S corporation for a number of years, if you had an you had a C corporation, you turned to an S corporation or elected to be an S corporation, any what we call built-in gains in that corporation, if you sold the corporation or sold the asset within 10 years, then you would have to pay ordinary income taxes on it, or capital gains, depending on the type of recognition that was required. That they came out in 2006, 2007, and said, look, we're going to just step away from that from that and the built-in recognition. And So basically, you'd sell those assets earlier than what you were originally planning and not have to, to deal with the built-in gain portion of it. However, that did not get fixed in December 2011. And so unless they change something at the end of this year, all those built-in gains are back on the books. Exclusion of 100% gain on small business stock. So basically what they had is if you had, again, a small business, that's you and me having a small business together, and we turned around and sold it to one of our friends or sold it to somebody else or whatever, we got 100% exclusion on the gain on that small business stock. That is a big benefit. It's gone. Okay. Election to itemize and deduct sales tax in lieu of income tax. The sales tax deduction, which is in this state, is gone.
And that's a big one for people because, I think there was a calculating table or whatnot, and, people spend, I don't know, $10,000, $20,000, $30,000 in sales tax. A lot of people. 10,000. I mean,
it's not so much that. It's the fact that first of all, in this state, we don't have any income taxes. And so there was the benefit in this state. Well, if you have sales tax and your sales tax exceeded your income taxes that you were paying, then we're going to allow that as a deduction. Well, in this state, we don't pay any income taxes. So every tax filer in the state of Washington got a sales tax deduction. And then if you went out and bought a large item like a car or a boat, or you redid your house or something like that, you got to take the sales tax on that. That's gone. You can't do that anymore. And that's a good hit for a lot of clients. In most of them, it's $2,000, $3,000, $4,000, but $2,000, $3,000, $4,000 in the 28% tax bracket, about $1,200, $1,500 in tax savings. The next one would be tuition deduction.
I mean, that's kids, that's education.
Mm-hmm. And the people that's going to hit is going to be the low-income people. Or when I say low-income, if your income's above a certain amount, you can't deduct your tuition. But now, in what we have with this law was you were entitled to deduct the tuition up to a certain amount. Well, that's gone now. Okay. Mortgage insurance premiums. This affects your business.
Yeah, and this is not the interest, which is the piece of the puzzle that politicians are always, baiting back and forth, which I don't think would happen. But, as far as the mortgage insurance, it's something that people pay a couple $100 a month, and, that can be a pretty big expense over time.
Now, if I remember correctly on the mortgage insurance, if you finance your house for greater than get a loan on your house for greater than 80%, you have to pay the mortgage.
Yeah, so if you put 10% down or 5% down, and then you end up with what's called a mortgage insurance, a monthly mortgage insurance.
Right. Whereas now that's where it was deductible in 2011, it's no longer deductible unless they change the law on that, which is going to be, that's going to hurt a lot of people. All this, get your house, we're going to be much more friendly on giving you loans and things like that. It's going to hurt a lot of people. Because that's what, $200 or $300 a month?
Yeah, can be.
Mm-hmm. Teacher deduction, $250. Well, you think, $250 is not a whole lot of money, but if you were a school teacher or an educator, you could take $250 off on your tax return. Well, $250 is at least a $75 savings on your taxes. Well,
especially when they're oftentimes spending $400 or $500 of their own money to buy supplies.
If that little.
I've heard as much as $1,000, $2,000 just on the supplies.
So you run into that a lot of times with a lot of your teachers. They're very dedicated to what they're doing, and I think we should help them a lot more than what we do. However, there's other ways that they can get that deduction, but this is if you're a teacher, here's $250. Merry Christmas, Happy New Year. And I think something like that should continue for teachers because they don't get recognized or paid enough for what they do.
Yeah, boys, let's roll through this last one real quick, and then we just have about a minute before we go to break. I have a quick question for you. You talked about the non-business energy property credit.
Mm-hmm.
What is that?
A non-business energy property credit. So let's say you take your house and you're going to go in and put energy-saving devices on your house, solar panels, storm windows, new insulation and things like that. All that had a credit that would go against your tax return. However, it's gone now.
So all the green building is all, that's going away. The tax credits you get for adding some of these more efficient.
Are you trying to tell me that the government is duplicitous? Or duplicity in their thought process? Yeah, they are. Huh. So yes, all the green thoughts are gone.
They're gone. Man. Okay, so my quick question here is, these all expired December 31st, 2011. We're kind of at the end here
of
these tax credits. these all didn't all start like, say, exactly 5 years ago or 7 years ago. These are all at staggered starts, and they just happen all end this year?
Yes.
Is this a pretty big laundry list of things to end at the end of one year?
Yes. The biggest change I've seen since on this was from 1986 when they went through and revised the tax law of 1986. That was when they really cleaned house. So this is a pretty big situation. And again, I want to emphasize the biggest thing that's going to affect people, which a lot of people are sitting there saying, oh, I'm not going to be involved in it, is the AMT.
Well, Boyce, thanks so much for joining us. We have to go to break. Again, Boyce Goff, owner of GDC Financial Solutions. And, man, that is a laundry list of tax implications or laundry list of things that can have tax implications on people. When we come back, Joe Tafoya, Kerry Carter are going to join us. A lot of people think about the app world, right? It's the new gold rush. They're going to tell you a little bit about what it takes to be in that industry and how it all works. We'll be right back after this break. You're listening to Brashenomics.